Bismillah, alhamdulillah, salatu wassalamu ala rasulillah, assalamu alaikum warahmatullahi wabarakatuh. So welcome to our 16th class. We're going to do three things today. First, we're going to finish the rest of the content of chapter 6, inshallah. And then second, we're going to do two data exercises. The data for both are available in Blackboard, and the slides that you're seeing in this presentation are also in Blackboard, titled October 16 class slides. So you can download them. So we're going to go through this content first. Second, we're going to do two data exercises. The data for both are in Blackboard. And the third thing we're going to do is the quiz. Now I want to remind you the quiz is a closed book quiz, and the quiz is going to be available at the end of the lecture. And I'm going to give you the password of the quiz, parts of it throughout the lecture. So you have to listen to the lecture, participate to get the password. And the password is a 4-digit password as usual. And I'm going to give you one of the digits throughout the lecture so that you can write that down throughout the lecture. And then at the end, when the quiz is available, you can take the quiz. So we're going to talk about four things today. The first one is horizontal analysis, which we did the horizontal analysis on a company in our last lecture. And we're going to discuss this a little bit. The second is we're going to discuss vertical analysis. And one of the data exercises we will do is a vertical analysis. The third thing we're going to talk about is the DuPont analysis. And the second data exercise we're going to do is on DuPont analysis. And then number 4, we're going to talk about some miscellaneous steps that follow the descriptive analysis. So we have the horizontal analysis, which looks at the total change from one period to the next. And in the next slide, I'm going to show you a financial statement that has done with a horizontal analysis. And the percentage change, so we look at, let's say, 2019, and we look at 2020, and we see what is the change between the 2 years. And then the second thing we look at is the percentage change. So the formula that we used to calculate the percentage change in our previous classes exercise was we took the old and subtracted the new from it and divided that with the old, meaning we took 2019, we subtracted 2020 and divided that with 2019 in our exercise. So let's take a look at the financial statements of Tyson Foods. So here we have the financial results of 2020, we have the financial results of 2019, and then we have the change. So what is the change? You know, the difference between 2020 and 2019. So you see the sales, 2020 is 47,000, and in 2019 it was 43,000, and the difference between the two is 3,864. So that's the total change. And then if you go to the far right column, you see that the percentage change. So the sales increased in 2020 8.95% compared to 2020. And then we have every single number. Some of the numbers changed positively and some of the numbers changed negatively. So this is an example. And we have done an exercise, as I said, those who were present in the previous class, we have done it on the American Airlines' financial statement. So you can go back and practice that again to get more familiar and more comfortable with this concept. So horizontal analysis looks at compares the performance between 2 periods. So that's the first thing. The second topic that we have is the vertical analysis. And vertical analysis is top to bottom. So here, each number on the financial statement is compared to a base. What does that mean? For example, if you have an income statement, then the sales, the total revenue is considered as the base. We consider that 100%, and then every number is compared with that percentage. And we'll look at a financial statement as an example in just a minute. We could do the same in the balance sheet. In the balance sheet, the base number is total assets, and every single number in the balance sheet is compared to the total asset. So if the total asset is considered 100%, then the other numbers are a percentage of that total number. So let's look at an example to make more sense of this concept. We have this, again, the income statement of Tyson Food. Now, if you look at this column that says 2020, and we have the sales 47,000, come down to this column which is percent of sales. Sales is considered 100%, and then other numbers are a percentage of that number. So cost of sales, for example, it's 86%. So that is calculated by dividing 40,000 with the 47,000, right? And so every single number, if you come down, every single number is taken and it's divided by the sales. So we have the cost of sales, 86% of sales, selling and administrative expense, 4.53%. And we go all the way down, the net income is 6.5%. And we have the 2 years side by side in total numbers and percentages as well. But the vertical analysis takes one of the numbers in the statement, in the income statement, it is sales, and compares all the other numbers with the sales as a percentage of sales. And we can see, for example, the net income, for example, it was 6.5% in 2020, and it was 4.8% in 2019. So we can compare them percentage-wise between the 2 years. Okay, so that's vertical analysis. The third thing we have is called DuPont analysis. DuPont analysis is a combination of 3 ratios, and the 3 ratios are profit margin ratio, asset turnover ratio, and financial leverage ratio. And these are the formulas to calculate these 3. So profit margin is calculated by taking net profit divided with sales. Asset turnover is calculated sales divided by total assets, and financial leverage is calculated by dividing total assets with equity. So now where do these numbers come from? Where do we get these numbers from? If we look at a sample financial statement and then see where these numbers are coming from, it would make more sense to us. So we have here, for example, 2 statements, income statement and balance sheet, the basic format of it. Now, the basic format of the income statement is the top line, as you have seen, is sales minus cost of goods sold. It equals gross profit minus the operating expenses, and it's net profit. For the balance sheet, we have 3 sections: assets, liabilities, and equity. So we have current assets plus long-term assets. It gives us total assets. And we have current liabilities plus long-term liabilities. It gives us the total liability. And then we have total assets minus total liabilities. It gives us equity. So now we have in blue and bold-faced all the items that we need for our formula. So we have the first, the profit margin, which is net profit divided by sales. So we have net profit right here divided with sales. That gives us the profit margin. Then asset turnover, we have the sales, again comes from the income statement, divided by total assets, which comes from the balance sheet. And we have this second formula. The third is the financial leverage, which is the total assets divided by equity. So we have the total assets, that's a balance sheet number. And the third one is the equity is also a balance sheet number. So we take the total asset divided with equity, and we have the financial leverage. So you see the first formula, both the numbers come from the income statement. The second one, the one number comes from the income statement, one from the balance sheet, and the third one, both the numbers come from the balance sheet. And we multiply these 3 numbers and gives us the DuPont analysis, which is also known as the return on equity. So you could get the same thing by taking net profit, dividing it with equity. That would be called return on equity. But to do the DuPont analysis, we take the 3 numbers and we multiply them. right? And let's take a look at example of a real company. For example, this is the 2020 DuPont or return on equity of Google. So that's profit margin times asset turnover times financial leverage, and we have the return on equity. All right, and we will do the DuPont analysis using some real numbers, inshallah. It will get more familiar and comfortable once we do that, inshallah. Now here in this slide we have the comparison of two companies in a few different measures, few different ratios between Walmart, which is a departmental store, a large departmental store, and Target, which is another departmental store. And we have the comparison between Walmart and Target. So the first one, we have the profit margin, right? Which, as you remember, net profit divided by sales. And we have, the number is 2.42, okay? And the asset turnover is, for the same company, 2.21. And if we compare that with the Target's, we see that Target's profit margin, which is 4.67, was higher than Walmart, which is surprising because Target is a smaller company. However, if we look at asset turnover, sales divided by total assets, we will find that Walmart is better, 2.21, right? Better than, they have more sales compared to the asset. Now, if you compare the actual numbers, for example, you look at the sales of Walmart, it's 510,329 million compared to only 71,879 million. The total number is much more for Walmart. However, the profit margin for Walmart is less than the profit margin, meaning compared to their sales, they're making a higher percentage of net profit in Target. So this is what this number is telling us. Now, just to get you familiar with some ratios, for profitability, if we want to see the profitability of a company, we usually calculate the following ratios: the gross profit margin, the net profit margin, the return on assets, and the return on equity. So we looked at every single one of them. For efficiency, right, we look at inventory turnover, asset turnover, and operating expense ratios. Now, inventory turnover and asset turnover both tell us that, are we using our resources to the maximum possible point? So are we generating enough sales for the assets we have? Are we selling our inventory and collecting the cash so that we can buy more inventory? And then the third type of ratio is the capital structures, which is debt to equity ratio, meaning to operate our company, how much money did we borrow and how much money did we collect from selling stocks, right? So if you ask me, if you have more equity and less debt, that means your company is less risky, because if you have a lot of debt, right, the debt ratio also tells us about the capital structure. If you have a lot of loans, then your company is at risk. Your company is at risk because if your company has lower sales, then you won't be able to pay the loans. So this is what generally these ratios tell us. Okay. Now we come to our last topic, which is, after we do the descriptive analytics, then what? We're going to go into the next chapter, after the break, which is chapter 7. The questions we would ask, why would this be? Why would the sales be more or less in one company? Why would the net income or net profit be more or less from one year to the next? We can ask the question, did the managers make it happen? Were the managers actively trying to do this? We could ask the question, do managers not like small losses? Do they prefer small gains, right? We could also ask, do the managers use the flexibility within the accounting standards to make higher earnings? or lower earnings than expected. If they manage their earnings, how do they do that? Managing earnings means you try to show earnings that are in your favor. So sometimes the accounting rules are flexible enough for you to play with the earnings, for example, choosing the different types of depreciation methods or choosing the different types of inventory calculation methods that would allow you to vary the income. So this is called earnings management, and you could do the earnings management, for example, using the legal standards, the legal permissible ways. But the managers also can sometimes do the earnings management using not legal ways, using illegal ways, and those are unethical. And then the fifth question we could ask, what incentives do the managers have to manage earnings up and down? Is it for bonus? Is it for other reasons, right? So we have the question, why do the managers manage the earnings? So these questions are following the descriptive analytics. And as you know, descriptive analytics only asks the question, what happened, right? Okay, the last slide before we go to the data exercises has a question and possible answers to it. The question is, if descriptive analytics unveiled, meaning uncovered, numerous large transactions for the same account, what additional analytics could be done? So if we have, for example, a number of large transactions, which we know could be unusual, then what could we do to find out why it happened? And we could do, for example, number one, anomaly detection. Anomaly, as we discussed in the previous class, is something that is abnormal, something that is not regular. So we could try to find what is abnormal about these transactions. Number two, we could check transaction frequencies, amounts, and time spans, timestamps. So we could see the frequencies, how many times they happened, the amounts, how much are the transactions, and the timestamps. The timestamp is something that is kept in the computer system. The server keeps track of when this transaction was recorded, who recorded it, and the details of it at that time, at that date. So this also tells us when these things are happening. And if you find that somebody's recording these transactions at midnight, for example, then that's suspicious. That's why somebody recording a transaction at the middle of the night, right? Number three, other relevant transaction metadata to identify outliers or suspicious activity. So metadata is data about data, right? Details about the data to identify outliers. You know, what did we say outliers are? Outliers are, you have a group of numbers or a group of transactions or a group of activities, and you have something that is way outside, right? Outside of the norm. And we gave an example in our previous class that, let's say the average of the class is 18 marks out of 20 in the midterm, and we have a student who scored 3. So that's an outlier, right? So anything that is an outlier, this could be in the lower end, it could be in the higher end, right? And we also can look at things that are suspicious, things that have, you know, a doubtful element. Why is this happening? This is not normal. So we could check that. And number four, we could do trend analysis over time, meaning we could see, you know, what is happening, what is the trend. For example, we look at some trends in our last class, sales increasing, for example, for Amazon. We looked at net income increasing for Amazon. We had these trends. So we could look at the trend, and if we find something that is going against the trend, then we might ask a question, you know, why is this happening? Is there something wrong with it? Okay, so now I'm going to give you 2 of the digits of the quiz. There are 4 digits. The first 2 digits are 1 and 9. So the first 2 digits are 1 and 9. Okay? All right. Very good. Now, let's go to the first data analysis. And what we want here is the Excel, we want the Excel for the first data set, which is the class 16 data 1 vertical, and save this file in your desktop, and let's start this analysis. So we have the vertical analysis, and you can pause the video and download the data file and then come back and start from here. So download this data file from Blackboard. So what we want is the percentage of sales for all of these numbers for 2020 and 2019. So we title them percentage of sales, right? Here, percentage of sales. So this is the vertical analysis. So what we want to do is we would call the total revenues 100% of the sales. So we would say for this number B9 divided by, what we want to do is $B $9. And the reason is, if we do this, then all the numbers would be divided by, when we copy, it would be divided by that number. So if we do that, that's 1, which is 100%. So let's convert this number into percentage, and 2 decimal, and we say okay. So 100%. So if we copy this to other numbers, we will see that all the single individual numbers are now calculated off of the sales number for 2019. And we could do the same for 2020. We do C9 and divide that with $C and $9. If we do that, and again we have to format this to a percentage, and then if we copy this over, we would see that we have the percentage. So now we have the percentage of sales. So what this is telling us is, for example, the if we come down and try to look at a few numbers, we have in the net income, if you come down all the way, in 2019, we have the profit was 4.31%, net income was 4.31% of the sales, and in 2020 it was negative 48.75%. So we looked at this income statement the previous day, as you remember. We compared the change between the 2 years, but now here we're looking at individual years compared to the sales. So for example, salaries was 27.53% of sales in 2019, and the same was 63.2% in 2020. So the salary percentage was much higher in 2020 because we know that the sales reduced. Now what we want to do is, like in our previous class, we want to insert the spark lines here in the F column. So if we come to insert and we go to lines and we have the spark lines, so we want to do the difference between 2019 and 2020. So if we click the lines, a window will pop up, and that window you may not see it on my screen. I am seeing it, but in the video it might not come. So what you should do is when this window pops up. So let me show you one more time. You go to the insert, and you go to spark lines here, go to this lines, and a window will pop up. And in that window, there is a box that says date range. In the date range, you should insert, you should type D6 colon E6, right? And click OK. And this line will appear. You will see this line appearing. So again, what you should insert in that window that says date range is D6. I'm typing it here so that you can see it. E6. So this you should type in that window that pops up, which you're not seeing in the video. Okay. And the spark line will appear. And now you can just copy the spark line. You can copy it to the other boxes, other boxes in the F column. And now you see that the line tells us what increased and what decreased. So here you see sales decreased. You see the cargo, right, as a percentage of sales increased, meaning they had more cargo sales, right, in 2020 compared to 2019, right? So this is interesting. Here you see this in this column right here, F9, the sales is 100% in both. So you don't see any change because we are not comparing the 2 years like that. We're comparing the numbers with the sales. So we have these spark lines, and we can go down and see, you know, for example, the salaries increase as a percentage. For example, the aircraft rent, for example, increased. So you have numbers that are increasing going upward, the line is going upward, and the numbers that are decreasing, lines going downward. So you can save this file in your desktop as the solution to the vertical analysis, and close this window, close the file, and then we go to the next data exercise, which is the DuPont analysis. So I'm going to shut it down. I'm going to close down the Excel. I'm going to not save it because I have it saved elsewhere. So you save it and exit out of it. And then we are going to now open the other data file, which is the DuPont data. And you can pause the video and open that file. And then we will start the exercise. So let me share the screen with you. So here we have the DuPont. So the DuPont, now we have 3 numbers that we are going to multiply with each other to get the DuPont. The 3 numbers are profit margin, asset turnover, and financial ratio. So we call it profit margin, asset turnover, and financial leverage. So we have 2 different companies, and we have the sales revenue, net income, and asset and stockholders equity for both the companies. So to do the profit margin, our formula is net profit multiplied by sales. So net profit is C3 multiplied by sales. I'm sorry, divided by sales, which is B3. So we have this, and we want to do, what we want to do is we want to format this cell down to 2 decimal. So we want to format it down to 2 decimal points. Or we could see it as a percentage. Let's format it down to 2 decimal points. So we have that. So 0.16 or 16%, that's the profit margin. We can copy it down for the rest of the years for this company, and we can also copy it down to the other company. So we have the profit margin right here, which is the net income divided by, or net profit divided by sales. The second is the asset turnover, which is sales divided by total assets. So here sales is B3 divided by total assets is D3. Again, we want to format that. I want to format that number, and we want to copy it down. So we have the asset turnover, and the third number is the financial leverage, which is total assets divided by equity. So total assets is D3 and equity is E3. So we have that, right? Total assets divided by total equity. So again, D3 divided by E3. And we want to copy this down. Okay, now the DuPont is a multiplication of these three. Okay, a multiplication of these three. So we have F3 times G3 times H3, right? So if we copy this down, we have the DuPont analysis. So what does DuPont analysis tell us? It tells us that how much return from our equity we are getting. So from how much money we are getting back. So if we say that this company is getting its 57% return on equity in 2020 compared to this other company only 11%. That means they've invested a lot of money and the return from that money is not that much compared to this company right here, right? So this is what we get in general from the DuPont, which is also known as return on equity analysis. Okay, so this brings us to the end of the second analysis. So what I need you to do is save this and exit out of this Excel. Save it as DuPont exercise solution. And now we are ready to take the quiz. So the second two digits for the quiz is 48. And I've given you the first two digits before. So the second two digits are 48. And you can take the quiz. And I want to remind you that the quiz is closed book. And it is, you should do it yourself and be honest when you take the quiz, inshallah. And I will see you in class on Monday, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.